Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
LME 3-month copper. Okay, so the big picture continues to have a dark blue late September 24 to late March 25 bearish Andrews pitchfork, with prices basing themselves all of last week on the middle time, currently at 91.09, as well as the 50% Fibonacci line for 2025 at 91.33. The top side was capped by the combination of the 38.2% Fibonacci line of the October 20 to May 23 move at 92.56, as well as the mauve flatlining medium moving average, currently 92.93, and a little higher by the gold slowly declining long moving average, currently 93.24. That was until today. You see today prices have pushed up and over not only these resistances, but up and out of the first of the three overhead congestion areas that I've mentioned so many times before. This one is between 91.83 to 91.86 and is the weakest of these congestion areas. The others are between 93.95 to 96.06 and between 97.50 to 99.95. Meanwhile, below we have the 50% Fibonacci line for 2025 at 91.33 and the 50% Fibonacci line for July 22 to May 23 move at 90.29, though this has not proved to be much use in recent times. It nevertheless worked in between November 24 to January 25, when it was the center of a quite large and successful reverse head shoulders pattern. Meanwhile, looking overhead, we have the bright red neckline, currently at 94.45 of the recent November 24 to February 25 reverse head and shoulders bottom, plus the combination of the green, slowly rising short medium moving average, currently at 94.77, and a 50% Fibonacci line of October 23 to May 24 move at 94.78. This combination is also in the center of a small February-based congestion between about 93.50 up to 95.50. Overall, now that the market seems to have based itself last week on the dark blue middle time, it would seem reasonable to see attempts up to and within this small overhead congestion, maybe even overwhelming it. Just bear in mind that this is part of a larger congestion area overhead, mentioned right at the start today, between 93.95 to 96.06. LME 3-month aluminium. As I said at the opening 2 weeks ago, and I quote, "Sometimes the technical analysis on a market works really well, and sometimes it seems that it works wonderfully. This is one of those wonderful times." End of quote. As I've stated here previously, there are a number of patterns here, one within another, all happening at the same time, all affecting the market. To start with, we have the bright red shallowy bullish shift pitchfork for the mid-December 23 to late July 24 move. We recently saw prices starting to establish themselves in March over the middle time, currently at 26.37. But, as I said 3 weeks ago, and I quote, "It was a tenuous hold over it, and prices dropped down through it and have remained below, pushing further down." This pattern still works at the lower time, which is currently at 23.28. End of quote. I added 2 weeks ago, and I quote, "This is one to keep on this daily chart as the low of the move has been right on the bright red lower time." Additionally, nearby we have the bright green neckline, currently at 23.54 of the October 22 to May 23 head and shoulders top, and the purple neckline, currently 23.61 of the March to May 23 head and shoulders top. Both of these have been pierced, but we have not as yet closed below either. End of quote. Well, what we have seen since is that the bright red lower time was punctured but repaired, with no closes below it, and worked pretty well at showing the low of the recent move down. The bright green neckline was breached, but only with one close below it, and the purple neckline was breached with two closes below it, but one of those was barely below. Thus, combined together, they eroded the bearish incentive enough to halt the immediate declines, basically in between the red lower time below and the bright pink lower time above, and that's currently at 24.23 of the now breached and possibly broken longer term November 15 to April 20 bullish Andrews pitchfork. A little above this is the significant 50% Fibonacci line, the December 23 to May 24 move at 24.54. On this I did say 4 weeks ago, prior to all the big moves lower, that, and I quote, "In truth I could see any significant move down carrying on till the 50% Fibonacci line of December 23 to May 24 move at 24.54, end of quote. Well, the reason for this is that we finally broke down through the previously broken, then repaired, then finally broken, very shallow, October 24 to April 25, shallow but quite wide bear channel, currently 24.39 to 26.64. This gave a primary target at 23.17 and a secondary harder to achieve target X at 22.10. The primary target was reached, but as for the secondary target X, well, as I said last week, and I quote, "I'm not so sure it will be, though it does complement the July low at 22.09.5. I'll leave it on for a little while longer," end of quote. Thus we have to look at the last 2 and a bit weeks worth of action and contemplate what may result from it. Right now I'd say the market's contemplating one of 2 actions. To either treat this as a potential bearish halfway hesitation move, or do what it did back in July and August last year at approximately the same levels and turn back upwards. I'm watching prices and their reactions to the overhead pink lower time and the bright red lower time below, and I'm also on the lookout for any false breaks as well, and I cannot emphasize that. Be aware of false breaks. LME 3-month lead. I'm continuing to see some interesting moves in this market. The key features here, and some of them have been here for a while, all relate to the very large descending triangle, possibly a descending wedge pattern that's made up from above by the early July 24 to early March 25 purple broken downtrend, currently at 1970, and also, for now, from above by a bright red breached, possibly broken, early August to late December 24 head and shoulders neckline, and that's currently at 1954. Though it could also be from below by a dark blue, also breached and also possibly broken, neckline extension, currently at 1900 of the July 23 to February 24 head and shoulders continuation pattern. 8 weeks ago prices broke higher out of this pattern, and 5 weeks ago they broke higher still over the long moving average, currently at 2023. Back then, and again 4 weeks ago, they peaked at or just under the December 2024 high at 2103. In the whole process, the market made a small March-based double top pattern, even atom type, closing below the neck of this pattern at 2015. Such a move gave us a primary target down in the 1966 zone, close to and just above the bright red neckline, as well as a secondary, harder to achieve target down at 1926, close to the lows at the start of this year. The targets on the downside were achieved, both of them, and then prices continued lower. Now this tied in with something I'd seen for the past few months, the possibility for the action since the start of December last year, setting up to make an ascending scallop pattern. I even suggested 3 weeks ago, and I quote, "The market may try down towards the lower levels, but then turn and go up, and go for the topside targets," end of quote. Okay, so to recap, we have created over March and very early April both an ascending scallop pattern and a double top pattern. Prices have also broken down through the bright red neckline and a dark blue neckline, plus reaching both targets below. The move higher over March and early April became a false break higher, and whilst we have since seen a big move lower, I also added 2 weeks ago, and I quote, "I would like to see some more action down here to confirm that this is also not a false break," end of quote. Well, we haven't seen that necessary confirmation action, as prices for the last week and a half have moved back up over the dark blue neckline extension, but not as far, not yet at least, as the bright red neckline. That all being said, I am not as yet fully convinced that the recovery is a false break lower, so I'll maintain the potential targets below for the descending triangle pattern, if not the descending wedge pattern. Hence, we have a primary target X4 down at 1812, and a secondary hard to reach target X5 down at 1671, which is down below the bottom of my daily chart. Finally, and this is very compelling given recent actions, let me once again make the point, one I've been making all this year, and will continue to do so going forward. It has been and still is to me the most important point of all. So at the end of December last year, we saw that 2024 had created here a very rare pattern, an annual key reversal down in LME 3-month lead. Hence, one should look at all things going forward this year in this metal in the shadow of this bearish longer term pattern.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.